Hey traders, David Frost, My Strategic Forecast. You're here for another episode of Common Sense Market Analysis. Today is Monday, December 16, 2024. We're looking at a daily chart of the SPY or Spider, which is the proxy for the S&P 500. What do we have on the docket today? First, she's above all the moving averages. The trend is your friend, and she is, in fact, eating time off the clock above all, and specifically the 20-period moving average, and in doing so, indicates she's building energy for another move higher. Can she still come back to test 600, give or take, even spike the 20-period moving average? Absolutely. There's nothing in the book or on the books that says she can't. We're just interested in playing the umpire, calling balls and strikes and saying, hey, what are the facts as we know them today? That's what a good analyst does. And in this case, the facts are she has done nothing wrong. She's around the all-time highs, above all the moving averages. The trend is your friend. When you look at the weekly chart, same routine. She's basically been going sideways for the last 2 or 3 weeks, and also a little bit extended from home base, the 20-period moving average, 20-week moving average in this case. However, going sideways is in and of itself a corrective pattern. It gives the 20-period moving average a chance to creep up toward price, gives price a chance to creep down toward home base. They don't have to come all the way to home base. It's an example of price creeping toward to work off some of the air quoted overbought condition. Little housekeeping stuff on the side. We should note that we have a kabuki theater situation this week. What does that mean? We have the FOMC this week. They meet Tuesday and Wednesday. Wednesday afternoon culminates with an interest rate decision and a presser by Jerry, aka Jerry's presser. Is the market expecting a 25 basis point cut? It's built into the cake. Do we really care one way or the other? Do we expect the Fed to surprise the market in any material way? The short answer is no, we don't. They're not in the business of surprising the equity or the bond markets. Not to say the equity or the bond markets can't or won't move on a Fed announcement, but their intent is to project what they're going to do and then do what they projected they were going to do. That's kind of the thing the Fed's been doing over the last couple of decades. Also, big picture stuff. We're getting into the holiday season with the Christmas and New Year's stuff going on. Therefore, we can have a correction during this period of time, but you should know that the participation wanes, the volume wanes as we get into the holiday season. Unless something exogenous happens, the volume and participation seem to dry up, and therefore we get what's known as the trading parlance as a floater type of tape. Not every single year. There are exceptions to the rule. Of course, nothing in the market is guaranteed. This is a probabilistic business. We're going to run a little intermission here. We're going to take Nvidia and we're going to look at a pivot high of 152.89. What are we going to do with that information? We're going to bring it into the automagical calculator, and we're just going to focus in on 134.91 for a second. These are the support levels that come out of the automagical calculator. And now you'll notice that the green line running across the screen is exactly at 134.91, and after Nvidia made a pivot high, this is the area where she spiked it through, but certainly rallied back away, making a subsequent high of 146.54. In math terms, that's about 11 plus points in a matter of days. Automagical calculator. Now, we use this calculator in conjunction with other things we're taught This is available to the folks that took the MSF Masterclass series. They get the calculator on an unlimited basis. The feedback that I've gotten from those folks has been very positive, to say the least. And yes, it will be available as a standalone product shortly. How do you figure out what this thing's worth is the challenge. What about inside the numbers? What happened in the notes, the commentary today? We started out the today with an early pivot found at 605. Below, the door opens for other stuff. They never did that. The flip side situation is staying above the pivot, giving Mrs. Market an opportunity to work her way up toward the next number in the sequence, 606.15. But wait, there's more. So as you can see, as the morning goes on, she starts to go higher and the thieves in the morning take hold. So we adjust some of the numbers. We come out with more numbers as needed. As we indicate each and every morning at 0 dark 30, we will post them on the board as needed. Pre-market thieves are headed up towards 615 to 640 is now a zone, give or take. 615 to 640, we'll pick out 606.40, and we'll quickly see what happened there in a moment. But let's go on. Let's get one more number up on the board. If they're above 606.40, what happens? The door opens for another leg higher towards 607.75. So we have a couple of things important. We have a pivot at 605. They never hit the pivot. We'll talk about that in a moment. Hold your horses. And then we have a zone, 606.15. We'll use 606.40, the top of the zone. That's important. And then if above, 607.75. These are targets and they're overhead resistance zones. First candle of the day. What's the high? 606.40. Dead on balls high. The green line is your pivot. They never got there. This was the morning trade. We were waiting for it. I was locked and loaded. This is in the live trading room. It's the give or take. They came to a low of 605.21. Funny how that works. They never got low enough for me to enter the trade. We did have some traders that front ran it, willing to buy it lower. This was the price in the morning, and this was the trade we were looking for. They only gave it to a couple of front runners. They didn't give it to the whole lot of us. Once again, found resistance just above 606.40. And then look what happened into the end of the day. As you could see, or not at the end of the day, but in the afternoon session, 607.75. And then 607.75 again after 3 o'clock in the afternoon. So you got the first time it hit was about 1:30 in the afternoon. Then they tried it again. And that was, in fact, repeat after me, overhead resistance. It's all in here. Everything you need to know to trade the markets, the S&P, the SPY, options on the SPY, the ES, the MES. And by the way, speaking of the ES and MES, by the way, read the notes, pause the video, and double check the work. But in speaking of the ES, we had a contract roll. Officially, the ES is now in the H or March 2025 contract. Both the Z, the outgoing DECE or December contract, and the incoming H will trade. There's a disparity, a price disparity. The H contract, if I'm not mistaken, was about 70 plus points ahead of the Z contract. We've seen this 60 plus points over and over again, several months in a row in 2024. Of note, puzzle piece, put it on the table. We had a couple of stocks on the move today. They didn't hit their entry objectives. And then here we are with our dozen of markets covered for Inside the Number and Live Room members. 4 support and 4 resistance areas for each market covered, all dozen markets. This is a value proposition product. What's going on over in Camp IWM? They were up $1.37 today, about 0.6%, roughly 2 times the ES and slightly above the SPY. So there was relative strength in the small cap space today, my favorite market leading indicator. But wait, there's more. Hold your horses. Today is, in fact, an on-time type of situation for the IWM. Those of you that have taken any of my classes will understand that and will scratch your head and say, hey, funny how that works. Little bit of an uptick in volume to boot. But wait, there's more. What about the folks down at the transportation department? They don't look so hot today. Below the 50-day moving average. Down 131 points, 0.8%. So basically, canceling out the IWM, this is my favorite canary in the coal mine. On-time situation, last couple of weeks of trading, last 3 weeks of time, there's only been about one up day in team transports. We're in an on-time type of situation. Keep a close eye on team transports. They filled this gap today. This is considered a former breakout area. We'll see how she treats it. This is my favorite canary in the coal mine, second favorite market leading indicator. The canary in the coal mine takes precedent. Go over to the weekly chart. You have the last big time breakup candle low in the sequence, coinciding with a 20-week moving average. 13,350, maybe it's up or down, meaning plus or minus 100 points from that on either side, give or take. That's an area we should get a bounce back in the other direction, if reached sooner than later. I would write that down, put it on a sticky note, 16,350, give or take. For those of you interested in the IYT, slightly different chart. I've done the work in IYT. I like 68.76 as support / bounce back in other direction type of place. IYT is the exchange traded product that supposedly tracks the transports, but it doesn't track it on the chart the same way it looks on the actual thing. Here's the actual thing. Here's this big breakup candle, for example, which was on the 6th of November. You go to the IYT and you have the same situation back here in October, and it looks totally different. What about the Q people at new highs? Anything wrong here? Absolutely not. Up almost 1.5% today, $7.64. Nothing wrong here, nothing to see here other than she's too far, getting ING in italics, too far from home base. Either she's going to have to go sideways, giving home base or the 20-period moving average a chance to creep up to price, or she's going to have to come back down toward home base. One of those two things is more likely than not to happen sooner than later. What about the financials? The XLF, 49.90 was our bogey. Once they got below it, you'll notice they were not able to ever recapture 49.90, and they continued to leak. There's a gap over here. Closing print is 49.19. And then we've talked about it before. Your bogey or line in the sand becomes these lows here, coinciding with the 50-period moving average. Then the next stop would be about 47.80 to 47.85. Write this stuff down. Put it on a sticky note under the category of XLF. 49.90 was our bogey. What about Smashmouth, the Philadelphia Semiconductor Index? Anybody notice where high of day is? Anybody dispute the fact that trend lines are meaningful? High of day coincides with the trend line that is the top end of our triangular pattern. We'll give that a simple, funny how that works. Now, this is the same routine that we followed for quite some time in team transports. You get a breakout or breakdown above the high, not above the high, but above the top end of the triangle pattern or the lower trend line of the triangle pattern on a breakdown. They don't have to get to the peak, but once they do get to the peak, if they get to the peak, they're what we call in the trading parlance out of time, and they will move in one direction or another. They don't necessarily have to wait till they get to the end of the peak of the triangle. Above all the moving averages, daily chart, SMH, trend is your friend. She's in an uptrend. Above all the moving averages on the weekly chart, trend is your friend. She's in an uptrend. Have I told you how much I appreciate each and every one of you? Without you, these videos are not possible. That is true and accurate information. We're pulling the ripcord here today. I'm David Frost, My Strategic Forecast. Thanks again for tuning in to another episode of Common Sense Market Analysis.